Welcome to the Transparent FX Academy. I'm Nick and I'm a top author on TradingView with over 190k reputation points. If you're new to the channel, make sure you subscribe. This is the place to go for high quality free trading education. Now, without further ado, let's jump straight onto the charts. In today's video, I want to speak about Euro GBP because at the moment we do have quite interesting price action and structure. Now, as usual, first I will be covering the technical side, then we will move to the order flow in order to provide as much education as possible. And by the end of the video, by using the combination of these two different types of analysis, we will try to understand where we have the highest probabilities of the next potential move here for this pair. Now, starting from the monthly time frame, what we can see now from a monthly perspective is quite clear that the market is currently testing and rejecting previous monthly resistance turned support here. The market tested its zone and started rejecting it to the upside. So in a situation like this, we could expect more bullish price action and for the market to complete this impulse correction and impulse pattern to the upside. We can also notice how in general after an impulse, if you want to measure the correction, we have to take our Fibonacci from the low to the high of the impulse. And if we do that, we can see how we have a perfect correction exactly to the 0.786 and a rejection to the upside. So essentially this zone here was a confluence of support given by the previous resistance turn support with the 0.786, which the market has in fact tested and rejected to the upside. So in a situation like this, more bullish price action, at least by looking at the monthly, could be expected. Dropping down on the weekly time frame, what do we have? Now, from a weekly perspective, we can notice how the market is currently testing previous weekly resistance, which was resistance here, and again here, which the market broke to the upside and at that point was turned support around this area. In a situation like this, we could expect a deeper test of the zone and then a rejection higher. So essentially, we could expect some short-term bearish price action and then longer-term bullish continuation. Going down on the daily time frame, what do we have? Now here on the daily, things get very interesting because also here on the daily, we can notice how all this area is currently acting as previous daily resistance, which the market rejected here, which now that the market is approaching it from above, is supposed to be acting as support and demand. We can also notice how while the market is creating this move, it is also printing an M pattern. And in general, after the creation of an M pattern, you would expect a potential rejection higher for the completion of the M pattern at the neckline. So what we could expect is a bit more bearish continuation here for a test of this previous daily resistance turn support. And then from this level, we could expect a potential rejection higher. Now, if we go and see what we have when it comes to the commitment of traders, so the COT data, which is what the non-commercials, so the biggest speculators in the market are doing, and we check the data for the euro, we can see how with the last reports we have constantly seeing an increase in net positions, reaching 146k net positions with 2.7k longs added on the euro with the last report from an institutional perspective and 1.1k shorts getting closed. So the euro is getting strong. We check the pound. We can see how the pound has been decreased in net positions with the last report with 10.5k shorts added from an institutional perspective with the last report alone, which indicates that the pound is getting weaker, the euro is getting stronger, which is exactly what we need in order for this M pattern to complete. So if the market will approach this support zone, how we could be approaching on our side a potential rejection higher? Well, as usual, trading is reactive and not predictive. The monthly, weekly, and daily combined with the COT data, those are the best time frames from a directional perspective. However, when it comes to confirmations and entries, the best time frames are the intraday time frames, so 4 hour and lower. Therefore, what we could be doing is monitoring price action from an intraday perspective during this move to the downside, waiting for the market to shift from an intraday bearish market as we would have to an intraday bullish market. And if the market would shift from an intraday bearish to bullish market and provide to us one of our valid entries, at that point we could be looking for a potential rejection higher for the completion of this daily M pattern at the neckline. Now, if you don't know what I'm speaking about when I say valid entries and these kind of things, That is all part of the mentorship program, which you can find at transparentfxtrading.com. Here you have the possibility to gain access to my entire course with all the rules of the strategies. You also have the possibility to gain access to one-on-one private mentoring, the VIP market breakdowns with the Telegram signals, the COT data software, which is the one that we used precisely in this analysis, the trading station software, which puts together everything that you need as a trader all in one interface. And if you scroll lower here past the testimonials, you will see that at the moment I'm running a massive promotion in which you have a huge discount all the way down from 497 euros to 97 euros for lifetime access to the mentorship program. Plus, since I have partnered with the Forex broker Blueberry Markets, if you want to open an account with them from the student dashboard and you do it, you can get a full refund credited back into your trading account. And if you scroll lower, you will see that at the moment there is still time to join before the timer goes to 0 and the offer expires. However, spots are limited, so if they get filled before the timer goes to 0, the price will increase anyway. So I really suggest that you join directly from here and take advantage of this in order to gain automatically access with the email and password that you will create during the checkout process. So definitely looking forward to have you on board. If you enjoyed the video, make sure you smash that like button and comment below. It really does support the creation of more free analysis education and updates for all of you. And I will see you in my next breakdown.